Mr. Bharat Shah, Executive Director with ASK Group, is with us. Mr. Shah, I hope you can hear me now and clearly.
Yes, good to see you, Prashant.
Thanks for your time, sir. I know that you are a bottom-up, stock picker, and you like to look at businesses and you're very focused on the business itself. But I would like to start today by asking you for your objective analysis of the economy, sir. How are we doing, really speaking? Because the big change has been the big fall in commodity prices, which has happened. We have been seeing results for the past many quarters for companies where there has been big improvements at the gross margin level. At the operating level, margins have improved, not so much though, because of various reasons. So that is the big change. But how would you assess the speed how are we really doing? And just some thoughts would be helpful, sir.
Okay. You are basically asking on two areas. How is the economy doing? And secondly, how is that translating into the performance of the businesses in the markets? As far as the first one is concerned, in very simple terms, if we break down the growth of the economy, it's a function of how the consumption is doing and how the investment into the new capex is performing, because these two factors really drive the growth. As far as the consumption is concerned, the urban consumption seems to be all right. The rural consumption definitely seems to be impacted with what has happened on the monsoon. So while consumption is still growing, given the fact that the growth of the income would take some more time, the consumption growth has moderated a bit. So that's as far as the consumption engine of the GDP growth is concerned. As far as the investment-led growth is concerned, that's a function of two areas. One is the demand for the new demand in the economy per se, and second is the capacity of the businesses to invest. I think demand slowly but clearly is picking up. It is the issue with the ability of the companies to invest into, because many of the balance sheets in the corporate sector are muddled, and they are already sitting over a burgeoning debt equity ratio. So it is impossible, even if they are willing, for them to put more money into the capex. So therefore the task of investing is by and large for the moment in the hands of the government. So if you look at the year of 2014-15, the government did not have adequate fiscal space, so they could not really put much money into the capex. But in the 2015-16, with whatever fiscal space has been created, I think government has been clearly putting into three areas as I see it: railways, roads and the defense. These three areas is where I think the capex from the government side seems to be forthcoming. It will take some time for that capex to work through the system and to drive the growth of the economy up, and at some stage it will be followed up by the private sector. At what exact time these effects will filter through? At what exact time the effects will come by? It's somewhat difficult to predict. I'll not like to make guess whether it is 3 months or 6 months or 12 months, but I'm comfortable that at some stage that will happen. So the overall GDP growth will be function of the consumption as well as these investment demand. We must also realize that the savings ratio, though it has fallen from the previous peak, it is still adequate to support investment growth. So, and supported by the FDI, I think the picture about supply of capital is not an issue. So that's where the broad growth equation lies. And we must not forget that the global environment is a tough one. Most of the significant economies are either struggling or just about keeping their head over the water. in the context of that, we have to realize and we have to keep our expectations somewhat suitably moderated as to what is possible. So in that context, if we are going to grow at 7.5% plus, which I believe we will grow in the current year in real terms, I think that should be regarded as fairly satisfactory. Second, as far as the earnings are concerned, not only gross margins have improved, but even operating margins for the reported results so far have been better, with the result that the modest growth of the economy is reflected in the tepid sales growth, or rather small degrowth in the sales, but improvement in the character of the business and the fall in the commodity prices is reflected in the growth in the profits. So the profits have grown while the turnover is moderated. That has been a story so far. Now at what stage both will be in a roaring shape, again, as I said earlier, we better wait and see rather than keep judging whether it will be 3 months or 6 months, etc. I'll prefer to wait and see. But I'm comfortable that things are moving in the right direction, and at some stage the economy will be at a higher growth rate, and so will be the corporate performance.
Okay, now, I wanted to pick up a few points in terms of what you said on the economy, but it's an endless debate, so I won't do that. I have a specific question on margins. Let's assume that for the next year and a half, things remain the same, status quo on the economy, and they're slow, steady, no dramatic improvements take place. For the corporate sector, do you think that they can keep expanding margins at an operating level? I mean, there is enough room to go, even if top line growth doesn't pick up adequately. I'm talking about this at an aggregate level. I mean, similar big debate is going on in the US as well, where profitability is at an all-time high, and there are those who believe that there is substantial room for improvement from here, and margins will be much higher for US companies than the past 50 years. I mean, that type of research. Do you believe that here, even if the economy doesn't pick up and it grows at the same speed, top line growth doesn't pick up, there is enough room for margin and profitability improvement?
Well, yes, but I don't share your pessimism that economy will not improve. I believe economy will improve. The timing is something that I do not want to hazard a guess about, but I think ultimately outcomes are a function of the process. If the process is right and the externalities are favorable, at some stage the outcomes will be favorable. I think the process is right, both in terms of the steps being taken as well as the way the economy is being managed. I think the steps are all in the right direction. Externalities need to be more favorable, but that's not in your control. So, subject to externalities improving and the process being right, outcomes will improve at some stage. So, I don't have any doubts about that. As far as the margins are concerned, I think margins have a scope for improving for a variety of reasons. One, we must not forget the fact that last several years of challenges have made corporate sector look within, make itself more strong, improve the quality and the character of the underlying businesses, and therefore they are better prepared after going through years of challenges today. Secondly, as the growth picks up, the scale will itself mean that the margins will improve. Third, as the relative level of indebtedness goes down, then the margins after the interest have a scope for further improving. And fourthly, I think the effect of the relatively softer commodity environment is not fully filtered through, and that will also contribute towards the improvement in margins. So I think margins certainly have a scope for improvement, but I think from a long-term growth perspective, the focus has to be more whether the overall size of the opportunity and the businesses grow. Because when they
I'm not
grow,
doubting that.
along with the
I'm not doubting that.
margins.
I'm not doubting that for a minute. But the only thing is, everybody expects to make money over a reasonable period of time, right? I mean, so the very long term also doesn't work. I mean, reasonable amount of time, I think people in the market would like to make some money. And they have made money. That's the point here. So, and we're not correlating where stocks are and what the economy is doing. But, it's not as if the markets haven't done well. So, the point is not whether the economy will pick up and can push stocks higher, but the economy must expand, must grow faster for stocks to stay even where they are. That's the point that I was getting at.
Yes, but I think, Prashant, to be sure, you are comparing economy and the markets, and to that extent, that equation needs to be viewed with a little bit more of appropriate kind of proper sort of correlation. Number two, I do not have doubt that the growth overall in the system will eventually pick up. As I mentioned earlier, you have to view the growth in the context of what is happening in the rest of the world too. We are not a Robinson Crusoe. So what is happening in India also has to be viewed in the context of what is happening in the rest of the world. So all significant economies outside India are in some kind of a challenge or the other, and we cannot completely remain unmindful of that. So to that extent, the growth rate of the economy, to my mind, is definitely satisfactory. Third, the returns to be obtained are in a reasonably long period of time. I don't know what is your definition of reasonably long period of time, but I definitely believe that there are enough reasons to believe that in a reasonably long period of time of say 3 to 5 years, there is a pretty solid case for making some sensible returns. And so far, also in the over some years in the past too, the returns have been healthy. So I don't think we should fall into the trap of seeing that the markets have to deliver every month and every quarter and every half year. That's not the business of the markets, to gratify you by delivering every month and every quarter or every half year. We need patience, we need to buy into right things, and eventually rest of the things will happen. And I'm pretty satisfied, as I mentioned 2 times before, that it is in the right course. So I think both in the reasonable, foreseeable long term that you talked about and the long term that I probably am talking about, I am satisfied that things are in a right course.
Mr. Shah, we'll leave it there. Thank you very much for joining us. A quick conversation today, but useful as always. Appreciate it.